Good morning, everyone. Welcome to our live trading room here at Admiral Markets. Glad that you could join us on the 20th of August on Tuesday. We're going to take a look at the markets and the currencies in just a second, but before we do that, of course, as you are all well aware, we're going to take a look at a risk disclaimer explaining that trading in general is considered high risk, financial markets in general as well. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. So thank you for your attention on that. All right, welcome to the live trading room hosted by, as I said, Admiral Markets. If you're here the first time, please take a look at the website of Admiral Markets. You'll see tons of stuff. We'll take you through that, but we're going to take a look at first the markets, of course, as well. Today we're going to take a look at swing trading primarily, by the way. So if you're more interested in intra-day trading, we'll be focusing on that on Thursday. But I encourage you to stay along and take a look at what we have to say, because I think it's well worth your time. But if you are more focused on that intraday, we will have a session on Thursday, and tomorrow we'll do everything, in fact. So same time, same place. We'll have educational webinars as well, by the way, on yesterday, in fact, and on Thursday at 5 p.m. London or 6 p.m. Central European time. We're going to take a look at my own money trading my own money. We'll take a look at its strategies, breakout strategies primarily, and don't forget to take a look at the Admiral Markets in the social media, like, for example, Facebook and Twitter. So with that said, I'm just going to hand over. I think my colleague here is waiting for me, maybe not. Okay, no problem. Let's take a look at the calendar. Alrighty, so today we have a very light agenda, really nothing going on today. Tomorrow, of course, we do have FOMC meeting minutes at 2 p.m. Eastern time. So tomorrow the market could quiet down after London morning, after 11 a.m. hits London. Then we could definitely see the currency just go to a grinding halt before that FOMC announcement is released. Might even impact already London Open tomorrow, to be honest. So tomorrow could be a bit of a, so I don't want to say, but it could be a bit slower session, but you never know. So we'll take a look, but it could impact the entire day already. So let's move on. Today there's nothing though. So let's see. Moving on to our charts. I was actually in this pound odd trade, but I just got out of it. Maybe I should hold on to it a bit more, I don't know. But I was looking at this retracement here, back to the 886 fib, and I took it upon the break here, and I rode it all the way to here, this target. I was actually aiming for this target, but it missed me by a few pips, so I aimed for a bit lower, and right in here. And it's actually breaking through my target, so very, very impulsive, tremendous Aussie and New Zealand weakness, and yeah, that's just gave a lot of opportunities. I didn't take the pound New Zealand, but I saw it. Unfortunately, it happened when I was sleeping, but I did take this pound odd, and the euro odd and euro New Zealand, they all did the same thing. So you don't have to take all of them, of course. One or two is enough. Otherwise, you're just placing the same risk at the same spot. That's not worth it. It didn't really matter which one you chose. They all worked very well. Very well. Aussie, dollar, also falling like crazy. So any Aussie or New Zealand weakness trade would have been perfect yesterday. That was really the time, the perfect time. And I was anticipating that already because of this impulse here and correction. And it finally happened yesterday morning, or my morning. So, with that said, this currency is on its way, and I just exited this, so I'm not going to enter again until I get some correction like this. I need a flag, a bull flag, a continuation pattern, a triangle, or something like that. At least a minimum on the 50-minute chart, and we don't even have that. So, do you see what I mean? Do you see why at the moment the pound odd is just, it's just traveling and traveling and traveling. We need at least some structure, some chart pattern to say, okay, the currency has paused, it's back to breath, it has, you know, it has energy to continue, because now it's just one movement, and it'll be like trying to hop on a train which is going 200 kilometers per hour, or 200 miles per hour, and that's just very difficult. Only James Bond can do that. And if you're not the best trader in the world, then you know, chances are that you're not going to succeed in that either. So it makes no sense to look at these currencies. We need a new chart pattern, we have to wait for that. Very simple. All right, and if you're not willing to have that patience, then that's not going to be positive for Forex trading. So patience and discipline, very important. So let's take a look at other currencies that might have something better going on for us. Let's take a look at let's just start from the scratch, and look one by one to see if there's anything interesting. Well, the euro dollar, not so much in my opinion at the moment. I can quickly skip this one from a swing trade position because we haven't broken above the 134 level. We haven't broken above the 134.15, as you can see. And that's major resistance, as we've been monitoring already for weeks probably now. So euro dollar is really in a range-bound area. It's going sideways. There's no trend, and it's about halfway that range. Irrespective of the fact if you're a swing trader or range trader, it's in the middle of nowhere. Maybe a bit closer to the tops, but I wouldn't want to sell it so close to an impulse like this. All right, so that could lead to this, for example. Nothing there. Moving on to pound dollar. Pound dollar broke the pink downtrend, daily downtrend line. It is at the 886 fib, as you can see, although we attempted to break it yesterday, pushed above it. And at the same time is in a rising wedge. Look at the purple lines. So a bit of a mixed signals here. We have broken trend line, downtrend line, but it's breaking with maybe a rising wedge. It's hitting the 886, stalling at it, but pushing through it, but pushing with a wick. So there are many ifs and buts, basically. If we zoom into the 1 hour chart, we can maybe even see a more closer support line like this. And you can see that the angle of price action is weakening. It doesn't mean that it couldn't pop up for another few pips there, because it is back at a support area. All right, we broke yesterday. We broke this top. We broke it. We're staying above it, so that could lead to the continuation. All right, so might be interesting. But I'm only interested in the upside, as you can imagine. Right? Downside is counter trend, and even if we break this pink line, we still have a purple line right close by, and we can bounce off these tops, for example. Right? I'm not interested in taking a small 30, 40 pip drop counter to trend. Doesn't make sense. It's not worth our capital. It's not worth the risk. We might as well look for something else. But maybe this upside could be interesting. It's with the trend. True, and Adrian has a good point. I didn't even think about it to mention it, but that's a very, very important factor, actually, is the divergence. We didn't talk about, we were only looking at price action and chart patterns so far, but there's definitely 4 hour and 1 hour divergence, and together with that rising wedge, that makes everything iffy. So even the upside is in that regard risky. Does everyone see this here? Look how price went back to the zero line where I have the arrow. Look at these two bumps here where the blue lines are, or blue circles. And compare that to the price stops. Right? Very important. Absolutely. Good point, Adrian. Thank you for that. So let's move on because this really makes it very iffy. Let's take a quick look at Euro Pound. I'm not a big fan of this one nowadays. And if you look at this daily chart, you can probably imagine why. Look at the wicks on each of these candles. Look how in choppiness like this, it's really chop heaven. Very difficult. So if anything, we're at support, but if we break that, we could fall back to the bottom. Four-hour world is in a downtrend. Pretty nice channel maybe here. Maybe nice is a bit too exaggerated, but it is a channel. And right at the bottom, we have a wedge. I don't know. I'm not that big. As I said, I'm not really that fond of the euro pound. I can see that if we would break this this bottom line, that we're in fact breaking the bigger daily support, we could have a fall back to the red line, which is not much space, but it is maybe 30-ish pips. Quite small, I think. I mean, for the euro pound, it's not that bad, 30 pips, as maybe other currencies. Could be. Let's keep an eye on it. Not that, as I said, I'm not a big fan of the currency in total. So let's take a look at the pound Swissie quickly. Blasted through those red lines or green lines. That was the long we were looking at, remember? And we had a big pin bar after that. We've gone sideways ever since. That sideways movement, in a way, looks like a bull flag. Let me take all the lines off here so I don't confuse you. And let me put the lines like this. Could be a bull flag or the start of a bull flag. And the AO is back to the zero line. There's no divergence here. This is something I think is pretty interesting. We can maybe even adjust the line like this. The top line, you see that? So we incorporate more touches. The more touches, the better. All right? The more touches the trend line has, the better. The more spread out those touches are, the better. If the angle of the trend line is around 45 degrees for a trend channel, that's perfect. For a trend line, you could easily have shallower because that's actually showing that the price is making a bull flag and correction. So a shallower trend line is better. All right. So these are key points on analyzing the currencies. We actually have a webinar on trend channels and trend lines. You can go to the admiralmarkets.com website and you'll get the archive of that. Okay, you can watch that video. It's very, very important. So I like this one. It looks like it's back to support. It's making it maybe even a triangle because you can see potential of this maybe. think if we break above the 1 hour high here at 144.74, we'll be making the first higher high on the 1 hour chart. And that's it. That will probably make the upside. What kind of targets are we looking for? Well, let's take a look at the fibs. The fibs are what I use for the targets. And they're always golden, okay? You can see stopped at the minus 272. I didn't prepare this beforehand. Stopped at the minus 618. Stopped at the minus 1000. All right. That's not a coincidence. I see it hourly. No, maybe not hourly, but because these are 4-hour bars, of course, but a lot. All right. So you have to know how to find the targets. Entries and exits. Sorry. Entries and stop losses are easy. All right. Entries are very easy. Just a break of the fractal or a fib or the price action candlestick. That's where your stop loss, your entries are. Stop loss is always below the candle high or the fractal, the opposite fractal. Take profits. That's where people don't really focus on, but that's where you actually get your reward. Look, and you put a fib on the next one, right to target. Right, swing traders. As a swing trader, you want to be a target trader. As a swing trader, you're not aiming for 5 to 8 pips, okay? Scalpers do that, not swing traders. All right? We're swing traders here in this session. So if you have a swing trading mentality, or you want to, you cannot aim for 5 to 8 pips because then you need to be right 99% of the time for the rest of your life, and that's never going to work out. So at the end of the day, you're going to lose money like that. All right. So let's take a look at the target here. Could be all the way up to, if we fib this move up, all the way at 147.16. Maybe if we use a bit more conservative target, let's take a smaller fib. $618 bounce. Target at, first target I should say, at 146.60. Still a good amount of space. Great. So I'm looking forward to that. That would be, I'm going to keep an eye on this, but in theory, the entry I'm looking for is a break above this 1 hour high and the stop loss below. That would be how many pips? I'll punch in the order soon, but I'm not going to do that now because I'm still going to flip through all the currencies and maybe I want to risk my money on something else. That's why. But it's on the short list so that you understand my process. It's interesting, but I'm still going to check everything to see if there's maybe something more interesting. So, or maybe I'll take both, if I like both, but equally. But that's just a shortlisted one now. So that's a stop loss of about 45 pips, I believe. But the target, of course, around 200. So you can see that that's definitely profitable, because a trade like this would definitely occur or succeed, I should say, at least once in 3 times, of course. And even at once in 3 times, we're making money because of the great reward to risk there. All right, let's move on. Oh, before we go to the next currency, well, let me just quickly show George where it is. Okay, you go to admiralmarkets.com, George. This is for the webinars. You go to your normal education platform where you sign up. Maybe you sign up there at webinars. You can sign up for all of our webinars, actually, like today, live swing trading, but also tomorrow, and our educational webinar, counter trading, Thursday, but then you can go, instead of live webinars, click on video archive. And then you'll be able to see trend lines and trend channels somewhere here, 27th of June. There it is. Trading trend lines and channels. No problem. Happy you can find it. It's definitely worth it. Let's take a look at Swissy, dollar Swissy. Let me again take all these lines off here. Dollar Swissy is stuck in a triangle on this day chart. We're at the bottom of the triangle. So this could be a hook back for that upside. Maybe we're hooking back to support like this. Or in fact, who knows? If we do break this trend line, of course, then we know that dollar weakness is in the market. And we'll have to see exactly how far it goes. Of course, you never know when a trend line is broken. There's always a matter of support still. Not on support, but horizontal support at around 90 points. So that's something we should be aware of. That will be the next to that triangle, the bottom of the triangle. But you can imagine that for me this is not interesting. Why? Does anyone know why? Anyone want to make a guess? Why it's not interesting? Got some answers. Tapering. Predrag says near support. Alrighty. Yes. The thing is that it's near support. I didn't even think about the tapering or FMOC. Something we could consider as well, but it's still quite far from now. So that didn't cross my mind, to be honest. But I understand your point. Let me say it this way. But it's definitely near support. That's one thing. But also, what I was thinking of as well is that if you look at the potential reward versus risk box here, it's massively negative, and it doesn't add up to take a trade like that right into support with a negative reward to risk, or I should say actually a reward to risk that's lower than 1, right? You know what I mean? So not worth it. If anything, probably could plan along here with a very tight stop loss, with a big target, and a massive reward to risk. How many times is that trade going to work? I don't know. Maybe once in 10 times. But we do get an extremely tight 30 pip stop loss probably, and a 500 reward. So even if it happens 1 in 10 times, it's worth it's a positive expected result in the long term. But nothing right here. We're sailing in the middle. Either we need a confirmation of higher highs and higher lows, or a break of this pink line for the downside. All right, next one. Adrian is, by the way, saying that in September he thinks it will be a big move. Okay, so big move up, by the way. So something to consider there. And that ties in with our analysis as well, that it is closer to support, or very close to support, in fact. And if not the trend line, then maybe this support. So let's see. Nothing for today, though. EuroCAD. EuroCAD is, I think, was a great trade to the great break yesterday. Fortunately, that happened during my night, around midnight, so I was sleeping. But that was a good break. And That was sweet, sweet break there. Let's see. I want to add something here. 1 second. Let me just take a look at this daily chart here. If you put a fib on this daily move, you can see a target around 104-ish, 104.20. Wouldn't be surprised if the EuroCAD makes it that high. So definitely an uptrend on the daily and 4-hour chart and 1-hour chart. So there's nothing about, there's no doubt about that. In fact, I would be even willing to, because of that uptrend, I would be willing to place a fib here and look for entries here at these fibs, because we broke out of maybe a triangle here. Let me take off this red line here and add something like this here. Broke out of the triangle to the upside. This looks like the break. In fact, if we move down, it looks heavily like a pullback, and I would expect a continuation in this environment. Why? Because we're in an uptrend, we're heavily in an uptrend, and a pullback is just a discount for big players, big boys to step in and drive this higher. So I think that's definitely on the short list as well. All right, if you're a big boy, where are you entering? At the bottom, right? Not at tops. This is a pullback within the uptrend. Very simple. So EuroCAD on the list as well, together with pound Swissy. For the moment, let's move on. Dollar yen is halfway a triangle. Do you see that? We see the pink lines at the top and bottom. 4-hour chart. If we look at the 4-hour chart, then maybe we see actually a small bear flag being broken like this, don't we? It's breaking right now. So there could be a small move here, even though we're halfway a triangle. There could be a small fall back to the bottom of that triangle. That is possible. You can see a fall, and then a small tedious move up, corrective price action, and a break of that trend line. Looks pretty good. Let's see. Only thing I don't like about it is if I compare it to the EuroCAD and pound Swissy as a swing trader, I can see kind of more space than here. In a way, this is more like an intraday trade. In fact, it's just relatively smaller compared to those others. The space is limited. Plus, the entry was actually higher, right? If it were to hook back to this level where we would have entered upon the break, if it were pulled back, and then maybe here upon the pullback. That could make it interesting. Otherwise, right here, if we enter around the break of the next hourly candle, the R2R is not that great. It's more like a 1-to-1. So, but I'll put it on the list for the moment. Let me take a look at the 50-minute world then. See, even the 50-minute world is really, if there would be at least a bear flag here or something like that. But let's move on to the dollar CAD. And Adrian was already asking, am I still in the dollar CAD? And yes, I am. I actually stayed in. On this 4-hour chart, we got a low here. As I said, this is not going to move up straight in one line. And basically, that's exactly what happened. We had a break of that green line that I just drew on the chart. And we're back at the bottom of an uptrend channel. We break the green line and make a first move. Right? That first move up isn't going to move away in one go. That's just how currencies work. They give a hook back. A retest of that trend line, confirm that bottom of the uptrend channel, move up again. Have a second hook back, and now I'll move up again. All right? That's why triangles exist, wedges exist. Nothing goes in one go. So what that happened is that when I took this trade here, there's always a chance of back, and I was waiting for the 4-hour fractal, as I said, as I explained, and that's what I did. I moved up here. I reduced the risk about we made a smaller triangle in here, in fact, at the bottom of the uptrend channel, and I moved my stop loss to here, as you see the red line, to reduce my risk to almost nothing, in fact. And now I'm up 47 pips. So it's a trade that's taking very long because we entered the 13th. That is a week ago, in fact. The swing trade is that long. But if you know how to trade management on it, then the fear factor's gone. Because I know here when it's going up that ain't going to last forever. It is going to hook back. I know they'll move up, and now it moves my way. But also I knew, and you knew, because I told you that how to reduce that risk when the opportunity comes, right? Like this. So you really were able to reduce that risk to almost nothing, and but live with that trade and have the chance of getting that profit, right? Because we still have a very good chance now, I would say, once we broke out of that pink line, to move to that upside and hit the 105 area, or even the 106 that we're targeting. In general, moving the stop loss to break even is considered iffy because you're ruining your R2R, basically, right? Something, and I can see the validity of that. All right, because most people move it too early. Most people move it when the currency moves down, tags it, goes up again. Tags it again, moves up again, right? Knowing when to move your stop loss at the correct time when your chances are decreasing is very useful. If you don't know that, then probably hanging into the target is better in a way, because otherwise you might be ruining your money management. All right, let's move on. This was a good break. I think that a hook back here as well is interesting. All right, we can fib easily this move up, I think, and look for entries around these fibs. We have everything in place. Bottom of the uptrend channel on the day chart, 4-hour uptrend, 1-hour uptrend. Even the daily, we have higher lows. We have lower highs too. So that's more of like a triangle. But as I said, we're actually, if you look at the daily, we're actually breaking out of that triangle, daily triangle. Or broke out of it, in fact, with a good 4-hour impulse bar. Do you see that? Now that's important information to me, because that translates to us that basically the market is willing to keep the currency there because there's no sell-off within those 4 hours. There's no major wick. Of course we can get a retracement, but most likely the chances that we'll find renewed buying are high. So together with the Euro CAD, definitely on the list, dollar CAD. Let's move on to New Zealand. Take a look at the Kiwi. We take the lines off here as well. Well, just like the odd, a massive fall. Adding up to some 200 pips. Yeah, for me, as a swing trader, I don't see anything at the moment because we've already traveled 200 pips. I don't see how you can enter right in here unless it's an intraday trade or a scalp, because otherwise you're putting all your stop loss way above here, You can do that if you like, but I rather wait for a hook back, pull back, bull flag, bear flag, excuse me, triangle, wedge, and then a continuation to the downside, because right now we are just at the bottom of a, or maybe not the bottom, but we're like halfway, we're in a movement, let me say it this way. So I wanted to stall, show me some correction, and then take the next one. Right now, even if you look at the day chart, we've just had a massive down already. 2 minutes ago, we had a massive down candle of about 120 pips. So there's no rush in trading this. Even if you trade day charts, you might as well wait for a small retrace tomorrow before taking it. Right? The only thing maybe that if you're really a long-term position trader, an entry below this fractal with the stop loss here, targeting maybe somewhere in here, could make sense. But I doubt that anyone's really a long-term position trader in here. So for any normal swing trade, let me say it this way, that's more like a position trade, we need to retrace or a pattern. Does everyone understand that? Does everyone see why that is necessary? Yeah, it's a small bear flag that just broke actually half an hour ago. Diverges on the 5 minutes. I wouldn't be shorting right at the, after such extensive move with divergence, personally. It would have been good for an intraday trade. We're talking about swing trades. Don't mind you that if you're looking for a scalp, then probably a break of some scalp right in here at the top of the triangle, break of the triangle. Yeah, definitely you can catch some pips there. Definitely. But to take a position trade here and target, X amount of pips to the downside, it doesn't make sense. All right, so I don't see any comments, so everyone is in agreement. Let's move on to pound yen. Well, clearly breaking to the downside. That's the yen, of course, dragging it along with it. Obviously, pretty big resistance area around 153.50 and 154. Obviously, big bottoms as well. So there seems to be a lot of space back to the bottom here of this range in a way. If you look at price action, it's just been caught between those double red lines since April, except a few days break above it. Pretty nice break actually a few hours ago. Looks like it could be a good intraday trade because the currency broke, it's moving. There could definitely be a few pips to the downside here. All right. As a swing trader, I would have been more interested in a break of this trend line. In fact, a break at the bottom right in here. That's where I'm interested as a swing trader. Once it's moved away from that area, then what you have left are intraday trades to the next support level. We can take a look at that next support level. Well, in fact, it's difficult to identify. It could be all the way here at 149. It's not going to fall, though, in all those 300 pips in the next few hours. We have to be realistic about what we can expect today, of course. maybe somewhere around 151.40 could be today's limit, looking at these stops in here. So there seems to be maybe 450, 60 pips left with the intraday trading here. That seems very likely, and it could be more, could be extended today, but that's an intraday trade. That's not a swing trade because we have a risk here if you look at the 4-hour chart and a goal right here. That doesn't add up. You know, it's very simple. It's always reward to risk. Doesn't matter if you like to trade or not, or it matters, but I mean, even if you like to trade, the next step is always reward to risk. And what time frame are you looking at? Right? Here, even here, risk is here, our target is somewhere in here. Doesn't add up. Still less than 1-to-1. Automatically means that there's only intraday trades left, no swing trades. Okay, let's go to Euro Yen. Potentially, right? Potentially. Euro Yen moving very awkwardly. This whole bunch of sideways move got a spike up, but slammed right into resistance and that pushed it down. Well, that maybe the bearish move could still happen. We were looking for bearishness last week. Kind of started to doubt it because of the fact that we were staying here so high and so long without moving down, and it actually spiked up. Seems to be a false spike though because we're moving down. So there could be that trade, that swing trade to the downside. If you're a position trader, that would have been a good break of this 4-hour fractal. There's a stop loss here, target around 25. But that's even more of a position trade than a swing trade, right? Swing trade was right in here, break of this, fractal with a stop loss here. Someone actually asked me about fractals, sorry about that. I was so focused on the charts. Fractals, we could definitely do a webinar on that, although it's not that difficult in a way because it's just tops and bottoms. What is a top or bottom? It's 2 candles to the left and 2 candles to the right. And you can use fractals to as a measuring point when the currency breaks out. So a swing trade would have been, for example, break of this fractal, opposite fractal, and you were aiming for a target or support resistance. I would be aiming for somewhere in here because that's the next support. So that's the reward, and that would have been the risk. That would have been the swing trade. That's behind us. Let's take a look at Euro odd. That's on the move. Euro New Zealand, that's on the move. Pound odd, that's on the move. Pound New Zealand, that's on the move. Odd New Zealand. Kind of, broke the triangle, of course, the bottom of the black line, bottom of the triangle. Broke it, but not with much force because we're making a range ever since that. Do you see it? So we can easily go back to the top of that range. You know, because we're halfway, right? We're halfway the bottom here, halfway the top. So I'm still going to be patient. I'm going to sit on my hands and wait on this one. Let's take a look. Either try to pick the top right here, or if we do break the bottom, then look for shorts. Gold is moving to the upside. It came close to the -272 in the 8/8 fib. I'm still in the neutral territory now, or actually I moved from bearish to neutral territory, so let's see. CAD Yen just like the other yens, looks ready for fall. That too already has moved away from the swing trade area though. Pound CAD. Pound CAD moving pretty nicely here. Definitely uptrend. You can see all those candles green. Let me take a look at the normal charts. That too looks pretty interesting, just like the dollar CAD. No reason to take all those CADs though. Alrighty. Does anyone have anything on their list that they would like to, that they think is an interesting swing trade? You could take a look at that. Or if you have a chart you want to share, please do so. Otherwise, I'm going to take a look, revisit actually dollar CAD, euro CAD, and pound splicing, and I'll choose one or two of those and see if those entries get triggered. So the pound splicing. Let me take a look at the 15-minute world here. Making a first higher high and higher low here actually on the 15-minute world, which doesn't surprise me. It's kind of already showing a signal that maybe we're going to break that red line. I like this pound splicing. I think it looks good. Let me take a look at the euro CAD again. Euro CAD moving pretty fast to the downside. That's something I don't like. Would rather have seen a bit more corrective structure here. So I'm not taking an entry exactly on the fib, but maybe if we get a 1 hour, let's take a look at the end of the hour, 30 minutes from now. See how this candle ends up. If it's still bearish, I'll wait the next hour. If it's maybe a big wick, could change things. This is the 5-minute world. Pretty hefty downside here. 4 or 5-minute world in one shot, 40 pips, almost a one go. That's pretty big movement there for 5-minute world. So let's monitor the 1 hour. So far, I like the pounds received a bit more than the euro CAD just because of the price action so far. Dollar CAD is moving slower. That's probably okay. So that must be then that the euro dollar is falling. Euro dollar is falling a bit. Yeah. So maybe this pound splicing and dollar CAD. Dollar CAD would be in fact a scaling, right? For me, because that would be a second position here. But in fact, it really doesn't matter. There's just separate entries on the same currency by coincidence. And something you always want to be careful of with scalings is that you really treat it as a separate trade, because unless you've planned it really in advance. Yeah, so that would be, I think, my preference here. I'm just thinking if the dollar CAD is going to be worth maybe waiting for price action confirmation as well. Maybe the 50 fib, if you look at the dot here and you see an up move sideways up, if it does go back to the 50, it could be pretty good likelihood of a bounce, because this is a sideways move within a impulse, two impulses. Usually if the currency hooks back there, it's a bouncing area. Some people call it a supply and demand zone, for those of you who like that. So that would add confluence. Of course, we also have a trend line at the 1 hour chart as well, right? Those trend lines could act as support and were resistance. So with that summarized and that said, I'm thinking about entry order at the 50 fib now and an entry order above the 1 hour fractal on the pound Swiss C at the moment. Those seem to be personally my favorite opportunity, most favorite opportunities for swing trading at least, right? Because some of these other currencies that I already said, they've traveled too much. You know, that the swing trade opportunity has been passed. These still have that in front of them. Potentially, of course, we'll have to see if the entry gets triggered. That's a separate story. But before I do that, before I punch in the order, I want to take a look at, revisit just everything from scratch in the sense that day chart is at the bottom indeed. Breaking through that. Looks to be plenty of space to the upside here, as you can see. We've got a lot of red lines higher, but there's space to those resistance levels, right? Obviously an uptrend channel here on the day chart, 4 hour chart. The break there of the high, making a higher high. Very nice. Good 4 hour candle. Just counting all the charts here, 5, 15, 1 hour. Trying to see if anything doesn't match up, because what I'm really looking for is actually something that is good. Many times you can build almost a case for taking currency almost at any point if you wanted to. We get, our glasses get colored by the enthusiasm of taking a trade, and we start to imagine things that are actually more positive than they probably are. So instead of doing that, I try always to find a reason not to take the trade, in fact, than to take it. Because if reason, we're very inventive and creative, right? As Forex traders, we'll find reasons. No worries. So I think, well, with that said, I think a 50 fib makes sense. Now it's up to you always. That's up to you. That is something I'm definitely looking for the Euro CAD, because it's just at the speed it's moving down. But if it goes back to maybe this 18 fib, which is approximately where we had break of the triangle, normally speaking, that should be support. There's a high likelihood of that. can see a spread of 1 pip. Very tight. So if you're wondering how is that possible, take a look at admiralmarkets.com and you'll see that it's a great broker with great spreads. Definitely worth your attention and your trading, in fact. Okay, let's take a look at that. So I'm going to go 2 pips below that plus a pip for the spread is 17. 317 I'll do. I'll wager a 50 fib right at the top of that sideways zone right in there at 103.48. That's 31 pips. And I'm going to target the minus 618 for now. Or maybe I'll aim higher. Let's see. You know what? I'll put the stop loss just a bit lower to incorporate this 4-hour low. And I'll go at 103.12. 103.11. Then I'm incorporating the 4-hour bottom, which is good. So then I have a 4-hour stop loss is under a 4-hour support level. I like that. Price is moving pretty fast, by the way. But let's see, and I'll target a bit higher maybe. I'll go for maybe 3-1, 74, 110. I'm for the same minus 272. Alrighty, there it is. Now I'll go to the pound Swissy. Let me just check the R2R here. Looks good. It's almost like a 4-1. I like that. So with a 4-1, this trade only really has to pan out 30% of the time for us to make money. I mean, 35% of the time would give us already big bucks. That's good. I think that a trade like this, from my experience, definitely works 1 in 3 times at minimum. So that should be, on the long term, a profitable trade. That's what we want. I'm going to do the same right in here. Pending orders quickly for you. I don't want to make it too long. I'll do it a bit faster. But I need to check the spread quickly here in the pound Swissy. Alrighty, so I'll go the spread and 1 pip above that, or 2. Let me calculate that. That's already. Stop loss right in here. And the target, we already know it's going to be this 272. $146.56. That's also almost a 4-to-1. Alrighty, so let's see how those go. So let's see, I had a good start of the week personally. With I shorted the Aussie Swiss yesterday and long the pound odd, as I said. So for me, that was a great start of the week. And this dollar CAD is also moving my way. So let's see if the week can improve. Alrighty, folks. Any questions from your side that you would like to ask me? Bogdan actually asked me a while ago. I didn't want to bore people with my answers here. How I'm doing? I'm fine. Thank you for asking, Bogdan. I had a great weekend. I hope you had too, by the way. Still enjoying the summertime, right? That's something we also have to be aware of, that it is August still, so trading is a bit different. Trading is a bit quieter, although you wouldn't say so. Looking at yesterday, regarding the Aussie and New Zealand movements. But I do think that now it's already the 20th of August, so we are moving slowly but surely, reaching maybe the end of August. I think that movement will pick up more and more as we move into September. My trading in July was not so spectacular. I just had a small profit, but August is pretty good so far. I've been making money despite the usual August choppiness. So if you can break even in August, that's good. Most of the Augusts I've experienced, at least. So always a difficult month. Let's take a look at the numbers for Adrian on the dollar CAD. So make sure, of course, you take a look at the spread of your broker, right? Basically, it's 1 pip below, 1 or 2 pips below, plus your spread. No, that's for the upside. Well, anyhow, the low here is 103.15, so I went a few pips below that, basically. And the entry is at 103.48, I think. Yes. I'm targeting 104.86. 87. I must say I don't like the speed at which the dollar CAD is moving as well. But as I said, I'm more used to taking market orders upon breaks nowadays than entry orders. Still looks like a correction to me. The only thing is, because it's moving pretty fast, what we'll probably see is a lot of bouncing around here before we move up again. So, in a way, there's probably no rush to enter, because even if it bounces here, it's probably going to move up, then move down, move up. Now there's plenty of time probably to catch it anywhere around here at the bottom of the triangle that's going to be made like that. Because if a price moves on whatever time frame, it doesn't really matter what time frame. If it moves fast, then except the pound, normally it doesn't move up. Pound can switch gears pretty fast, but usually speaking, it's gonna take time. As I said, you'll probably see something like this. Bounce, maybe even break like this small, get divergent on a smaller time frame, break up, make a triangle like that, break up. It's probably going to take few hours, but swing trades, of course, take that time, so that's not strange. Stop loss is good. It's below the yesterday's low. We already broke yesterday's high. You see that? Broke yesterday's high. Our stop loss is below yesterday's low. It's moved down, therefore should be retrace and find support anywhere along this area, right? Now, if this were to turn into a massive turnaround, then probably will not break till tomorrow, and we could still try to exit that trade for break even tomorrow. That's what I would say now. Alrighty, folks, let's take a look at something else. I didn't see any preferences here for any currencies, but we can shop around. Maybe take a look at something we usually don't look at, or I don't look at. Let me see. Take a look at this list here. Euro Swiss. I really didn't take a long look at that one. Let me take a look. That was really a long time ago. As you can see, though, by the way, before we dive into the Euro Swissy, that even if even if we don't have a particular trade that is entered yet, you can see one's getting close, one is maybe not getting close, and the others I'm ignoring at the moment. You can see that irrelevant of the actual trades at the moment, just try to picture the emotions here, the trading psychology. I just want to emphasize one thing on trading psychology before we dive into another round of analysis, is that basically you want to kill your emotions. You want to control them as much as you can, because you have to realize that those emotions are going to give you a roller coaster of your life. They're going to make you free fall instead of skydive. It's not going to be good for your trading. All right. If you're excited about a trade or too emotional, in fact, step aside from your screen and, I don't know, go play something else for the moment, because you want to be as strictly focused. You want to treat it as a business, basically, instead of something that is exciting. Because although it is exciting and it's interesting business, if you get excited about it, then emotions are actually driving your decisions most likely, and your focus. That's not going to be good. All right, it's going to influence your trade management and everything, your decisions to take a trade. So what you really want to do is just realize what you're after in the market today. Know your goal, know the type of trading you're seeking, know what you're looking to trade, and look for those opportunities. Hunt for those specific opportunities and ignore currencies that don't match that. Even if a currency like the pound odd has traveled 250 pips, don't regret the fact that maybe you missed those pips and jump in now, because chances are you're jumping at the top and it goes against you and you're beating your head like, oh my, how can I jump in right at the top? Those were emotions talking to you because you missed the previous trade. You don't want to look at the previous trade. You want to focus on the current focus, right? You want to focus on what could happen, what could be the next trade, not the last one. Let's see. Yeah, nothing really looks so strange. I see I didn't really miss much. We're probably maybe getting closer to a bottom here, but But then again, the euro Swiss is falling pretty fast as we speak. So yesterday it looks like there was a good break here. In fact, if you look at this trend line, that was a nice break. You see, this is what I was talking about. Good break, hook back to fib. Although it didn't really miss the 382, so that would have been probably not a fib that someone would have traded because it just missed it by a few pips. But the principle, you see what I'm talking about at least, right? Classical example, I can show you on the pound out also. Break, hook back, continuation. So that's something like that I'm looking for on dollar CAD. Will they always work? No. Did they work often? Yes. So that could have been a good downside trade, but right now we're very close to that weekly or daily trend line, so nothing on the euro Swiss. The entry on the pound Swiss, well, the pound Swiss I'm going to delete, in fact, because the price just moved through. Wait, I think I made a small mistake there with the stop loss of the pound Swiss. Should have been under this 1 hour fractal. In fact, let me see. No, excuse me. I know what happened. I wanted to use this level as the stop loss level. So I put it underneath that green line there. But the problem is price broke through it. So that sometimes happens. Of course, you plan a trade, but it doesn't happen as planned. So I'm going to delete that for the moment, because the price went through that stop loss level. That level is not valid anymore. But if it would break, if this bull flag would break somewhere later, I'm still looking forward to trade it. It's just that I don't have a concrete entry or exit. I have a trading plan still that's still intact, but the exact entry and exit are still to be determined when we break that bull flag, if we do. So we'll have to see. That's a pity. So let's take a look at all the currencies again. Maybe something changed and something interesting pops up. Let's see, euro dollar was moving to the downside, but quickly found support. That's why it's tricky to trade the euro dollar, because it's just in a range environment. Breakouts that look like breakouts don't turn into breakouts. Look at that small wick there. All right, so it's a triangle, yes. It is a triangle we want to trade? No, we're halfway a range. So nothing changed there. Pound dollar. That too was breaking that pink line, but quickly found support as well. As I said, don't look for downside, only look for upside. And I think that people who just entered short know why that is so. Unless you're really a great scalper and you just caught 8 pips there, maybe, I don't know. Good job. Otherwise, you know why it's so risky. Yeah, upside is still iffy because of the divergence. Can we still make this push up? Oh, sure we can. Despite the divergence, we definitely can make that upside. Divergence is something that is an important effect and definitely has effect, but it doesn't necessarily have an immediate effect. It doesn't necessarily have to, affect the market right now, right here, right this instance. It could be tomorrow. And then in retrospect, we'll say, oh, divergence. It was divergence. That's why we got that bigger retrace. But most of the time, we don't check in the past how long it took to turn around, and that sometimes takes longer than we expect. So we could make that upside despite the divergence. But the divergence does make it iffier and trickier, and the profit potential definitely should be adjusted to the downside, because likelihood of the currency moving a lot is reduced because of that divergence. So I wouldn't be interested as a swing trade. I wouldn't be interested in that, because I think the profit potential is limited. So nothing changed there. Euro pound, nothing changed. Pound Swissy still interested, but we'll have to wait for the exact setup. Dollar Swissy moved to the downside. Nothing really changed though, in my opinion. I mean, nothing really concrete to trade. This is the Euro CAD 5 minutes. Seems like we're bouncing off the 618 fib as we speak, in fact. Maybe, just maybe, because who knows, there could be some more downside, short-term downside momentum and power driving this. Let me say it this way, we respected the 618 for a few candles. That's a conclusion, that's a fact. The rest is just something we have to see yet. We do have 50-minute pin bars. One hour is nothing special as yet. I would still wait. I think the Euro CAD in general, though, don't want to take an entry order on it, but it could be at a bouncing spot for more upside. So I will keep an eye on price action here in this zone, unless it breaks to 786. I'll put my stop loss if I take any trade either below the new candle low or below this low of 137.72. Targets anywhere in between around 138.90. Minus 618 target there. Someone has a good question. Adrian has a good question, I should say. If the move isn't too impulsive. In a way, it's always good to look at. It's good to look at impulse correction. Yes, I agree. But sometimes corrections can be impulsive. I must admit that I like corrective corrections more because they're even a higher guarantee of success. For example, if we have an impulse and we have a triangle like this or a flag and we break, then that's a high probability trade, especially if we're in an uptrend. We're in an uptrend, check. We have an impulse, check. We have a slow downside, check. We have a break of that slow downside, check. That's the most safest trade, safest trading you can have. You cannot have it safer than this. It's impossible. This is the safest trading. If you want to trade safe, focus on these setups. Absolutely. Totally agree with Adrian. If you want to, because sometimes we won't have that. We don't have that this morning, except the pound Swiss C. So what we did have on these CADs is a triangle. And break the triangle and let's go back to the triangle. So that is more like, yes, it is an uptrend. And we broke out of that. But instead of a slow correction, we're having a fast correction. So let's take a look. Yes, uptrend. Impulse, uptrend, check. Slow downside, no. Do we have a break? No, because we're taking a fib trade or a bounce trade. If there would be a bounce trade, we have more confirmation. Then it would be a green. So if we wait for a bounce, we have 3 green hooks and 1 red X in a way. Most of the time, the impulse and trend are more important. And although I like to have the slower correction, indeed, it's not so that an impulsive correction wouldn't be tradable, per definition. It's just that the market fell a lot. The market was in agreement that price had extended to a point that no one was interested in buying it anymore because everyone was anticipating the drop and retracement. There was agreement on that the currency would retrace fast, so it retraced fast. But when it gets back to support, the market could be in agreement again that this is the bouncing spot and we're moving up again. All right, so that's how you can interpret that as well. The dollar CAD would be with 2x2Vs indeed, because it's really a specific situation where we just broke out of a trend line. As I said, it's a break, pullback, continuation. In those cases, the balance tips over to the V's, or because it's a specific situation where we just broke out, and then the likelihood of market finding support is just very high. If it would be the other way around, if we continue, let's say we continue to the target here, and then make an impulse move without making a break of a decent trend line, then I wouldn't touch it. I wouldn't take a fib trade there necessarily, unless I get some price confirmation or a pattern. So that's the difference between those two. It's a specific situation right in here where we just broke out. Those tend to be more reliable than if we don't have a particular breakout. So, you know, that EuroCAD in fact also has that line. Let me take a look. Yeah. So in a way, the EuroCAD or dollar CAD were in a way equal to each other. The only difference is that when we're looking at it, is the reason why I chose dollar CAD was just the fact that we already had a 1 hour candle here, and the dollar CAD didn't. So the dollar CAD didn't, relatively, EuroCAD looked more bearish than the dollar CAD. That was the only difference, really. That's why. So the dollar CAD hit my entry order, in fact, and bounced off that level. But because I had a buy limit, it just missed me by an inch, or the difference of the spread, which is only 1 pip. So it missed me by a pip. That seems to be a pity because it's bouncing now. But as I said, really no rush, because if it bounces, there'll be plenty of time still to catch something a bit higher, maybe when we make a triangle like that, or even wait for the break of the triangle. Or maybe it's just, you know, it hasn't bounced yet. We don't have a really confirmation. Only thing we have is 5-minute candle, so maybe it'll still push a few pips lower, right? No worries. New Zealand dollar, as I said, no reason to jump in now. We're getting some reversals here on the 15-minute chart. You can see already some bullishness. Oh. And you can see, despite the huge up move on the euro odd, for example, the last 5 hours, we've just been bouncing in between 30 pips. 4.5, sorry. So nothing really major going on. Pound odd is pushing a bit, but how much can it push more before it starts to retrace? That's something you always have to realize and plan ahead, and realize that if you jump in here, where's your stop loss in this 1 hour chart? Well, you could take an extremely tight stop loss and put it under the last hour's low, but that's more like a 15-minute trade, not an hour trade. Stop loss is here, right? That's the last 1 hour support level, with the tops right in here and the bottom. I don't think anyone wants to take a 200 pip risk. And with a very likelihood of a retracement happening right now, or soon, I should say, because we never know when exactly, 100% with certainty, of course. Darshan has a question on the EJ. Let's take a look at that. Let's see what the question was. If we have hit support on the 4-hour chart around 129.30, uh, 129.30 means nothing to me somehow. Maybe it's a target. Let me flip this downside. Yeah, it's okay. Yeah. So that's why it bounced. You see, if you fib the first move down, it went to a 50 fib, and then stopped right to minus 618. See that? You can really use these fibs any time frame, any place, really, right? For targets. And these targets are pretty good, especially the minus 618 target or a bigger minus 270, minus 272. Really pretty reliable as a bouncing spot there. So that's the reason why it's bouncing. But if it means total upside here, I would be very leery at the moment. It's probably just more a bounce. If anything, we're back underneath the black downtrend channel. We broke the pink support line. We're making lower lows, lower highs on the 4-hour and 1 hour and daily. Definitely in a downtrend. So I think this is just a bounce. And if anything, I'll be more looking for, I think that technically it's set for downside. It's in a downtrend, and you move up with likely find resistance. That's how I see it at the moment, at least. But if you look at the day chart, I do have to admit that this is just a sideways box in a way. And we had a huge up move prior to that. From a weekly chart, you would expect one day maybe to continue up. Who knows? But if I look at this sideways box, I can see some space to fall, at least to maybe 126, 125, right? That blue colored red circle there, that area, that seems most likely to me. Is it something is it something at the moment I'm really looking forward to trade? So it's okay. I liked it a lot, but this kind of threw me off. We are breaking that to the downside, so it's kind of back into what I was expecting already earlier. So maybe not that bad. Maybe if we get some up move correction, probably a bear flag and break would be great, something like this. Or if we were to hook back to maybe this level here, around here, 130, I would say psychological number, but it's also a bottom in here. That could be a turning spot. Alrighty, folks. Well, if you still have one question, let me know. Otherwise, we're going to wrap it up for today. And I'm going to thank you for being here. And I hope you can join us tomorrow, because we'll have a session tomorrow. We're going to be not only taking a look at swing trades, we'll quickly look into swing trades, just to see if any of our trades today got triggered, or if there's anything that might be interesting. But it will be pretty fast, so that we round up quickly, and then we can move into intraday trading. And on Thursday, we'll just primarily focus on intraday. Okay, so would be great if I see you there. And don't forget that you can look at our Admiral Markets website, right? And you'll be able to see the spreads here, which I think that will definitely please you on not only euro dollar, but look at this Aussie is less than a pip, for example. Dollar CAD is less, dollar yen, and even though you have some that are, even those above a pip, it's only 1.1 or 1.5, so definitely worth your time. Okay, thank you, George. Glad that you enjoyed it. I hope that others enjoyed it as well. And I don't see any questions. We give a few seconds here though, if anyone is typing. No, I guess not. That's fine. I'm happy about that. Everything is clear apparently. That's good. So I wish you great trading the rest of the day, and lots of success with that. And as I already said, I look forward to see you tomorrow. Okay. Cheers, everyone.